S&P's trying to hold on to a weekly gain on some of these Russia-Ukraine tensions. Joining us this morning is Northern Trust Asset Management President Shundrawn Thomas. Shundrawn, I wonder what you're making of how quickly the geopolitical conversation has supplanted what was a pretty active Fed discussion, and whether or not that complicates the Fed's mission of trying to engineer some kind of soft landing.
Well, I think we've said all along, when you think about the situation that the Fed is in, they already have to thread a pretty challenging needle, so to speak. It's the dealing with what we know is inflation right now, and it's a question of how persistent it is, because we know it's rather substantial near term, but also now these not only rising geopolitical issues, but also, Carl, I'd introduce a third element to that. They've talked about, certain systemic challenges that they're also trying to manage over time, and that's faded very much to the background. So certainly complicated, and the thing that we know for sure is we're going to see increased volatility in the markets.
Right. So in terms of what's actionable at the moment, what is smart? I mean, historically, we've seen a lot of geopolitical episodes get inflamed and then resolved quickly, and the market drawdown really isn't terribly dramatic when you look back at the history. But does cash become a more reasonable position here, or what changes?
Well, I think the practical reality is you've seen time and time again, when we have significant, unprecedented issues, geopolitical issues, the thought that we can predict them in any way or fashion in the market and try to time that, that's something that we've seen done at our own peril. And so I think the reality is you should always be thinking about how are you balancing the risk in the portfolio. One of the things I think about in this environment, while we still have, I would say, our disposition to be on a relative basis risk on, there's a way you can manage that risk. So, for example, we actually like high quality, high dividend stocks in this environment. We also like lower volatility stocks. Now, to be quite frank, given some of the other turmoil we saw in the markets, we believe those are areas where you could see relative outperformance and better risk management in the portfolio. And I think that's even greater the case when you think about what we're seeing in terms of the volatility we see now and with the high tensions that we see around that.
Shundrawn, we've got Fed nominees in limbo right now after a GOP boycott on a Senate committee that really kind of hinges on whether implied or explicit monetary activism and what the Fed's role is, given the fact that it has a dual mandate and doesn't include that. Yet it's a conversation we're seeing play out in central banks across the world. I know it's something you've been talking about quite a bit as well. How does it evolve?
Yeah, and so sometimes what we have to do is sort of zoom out from the near-term sort of politics and the political rancor, and we have to say to ourselves, what are the key secular trends? And so from our standpoint, it's undeniable that whether you talk about investors or business leaders, there's a recognition that what I would describe as maybe a winner-take-all or winner-take-most form of capitalism has to increasingly move towards something that's more equitable for all stakeholders. We definitely see, as you've referred to, central banks really leaning more into that activist role, dare I say that. And in some respects, the European Central Bank has arguably been at the forefront of that. And we see that on some level from the Fed. Broadly speaking, we actually think this shift, because we're seeing it in the private and the public sectors, actually leads to a more sustainable form of capitalism for all participants. So again, we think that's a trend that you're going to see, notwithstanding, again, the near-term political rancor that you see.
So how does that play out where something like inflation is concerned, which is only going to exacerbate income inequality, and which we know is a very tight rope that the Fed is now walking?
Right. And so, I would say a couple of things. And on one level, we can think about, some of the challenges that the markets are concerned about with inflation. But to be clear, all forms of inflation that we think about are not bad. So if you think about some of the things that we've seen in certain segments of the economy that struggled for a long time to have wage gains, we have seen some improvement there. Now, there's a managing of that, and we don't want to get ahead of ourselves in terms of the level of inflation. And that gets back to this quote unquote activist disposition, because I think what happens over time is while a lot of people are concerned about many interest rate hikes, we're probably towards the lower end of that. We're looking at, from our interest rate policy standpoint, maybe 3 interest rate hikes this year, as opposed to where the extreme or some of the predictions of the market are. And part of that is we look over a longer arc and say, the Fed is thinking about how do you also balance some of these systemic risks when you think about not only employment generically, but in certain areas of the economy. Think about, in diverse areas of the economy.
That is fascinating. Even as J.P. Morgan just yesterday went to 7 hikes for the year, you can almost feel the street just trying to grope around in the dark here. There's so much we don't know.
Shepard Smith here. Thanks for watching CNBC on YouTube.